Hello everybody, this is Lara at pureelliottwave.com. I am working through my list of other markets people have requested that I analyse for them. Today I'm looking at Ravencoin. This is a request from my member Tony. I am going to start with Elliott wave analysis, and then I've prepared my technical charts already. So I'm going to do this Elliott wave count with you, and I'm going to talk through why I'm deciding to put the labels where I put them. I do this because a lot of people find this helpful in their learning Elliott wave. First up, let's look at the whole price history. This is a weekly chart of Ravencoin, and my data from Yahoo Finance starts on the week beginning 4th of March 2018. I want to view this first on an arithmetic scale so that we can see this is a market that exhibits exponential growth. When you see a chart of exponential growth, it starts out slowly and then it accelerates. This just doesn't accelerate through the middle, and well, it does, it accelerates through the middle and it utterly explodes at the end. This is an incredibly volatile market. Let's view it on a semi-log scale so it makes sense and we can work with this data. I'm going to start with the weekly chart first and then move to daily, and I'm going to start my wave count here at the low. You have to start your wave count at a price extreme. I would label this possibly a corrective movement complete down here. So maybe let's see. I'm just thinking if I put that in, you can't start a movement off with a correction. A movement starts with a 5-wave motive structure. So I'm going to start at the low. I'm going to use an impulse, and I'm going to label this at primary degree because it looks like this from November, or so March 2020 to February 2021. Yeah, just under a year. So that's about right for primary degree. If it was over a year, I think I would label it cycle degree. A cycle degree wave should last 1 to several years. Primary degree waves last months and can be a year. Now I'm going to have to look at primary 1 at a lower time frame and see, does it subdivide as a 5? I have to check that. I'll do that at the daily chart level. So I'd put 1 up here and 2 down here. So 5-wave motive structure up, 3-wave corrective structure down, and it does look like a correction, doesn't it? Let's put some labels in there. I think it might subdivide okay as a double zigzag because I'm looking from this high to this low. I think this looks best as a zigzag, A, B, C, and this high to this low, I'll check that. But I'll expand this out and show you what I mean by I think this movement from this high to this low. And just a note, Elliott wave analysis works on highs and lows, not closes. And that's a big difference between Elliott wave and other technical methods. So I think I want to put B here, because if I put B here, this high is a little bit below this low, then B, I'll show you why I'm not going to do that, would end with a truncated C wave. C has not moved beyond the end of A. Now, there could be a truncation there because it is appearing in the correct context of a strong downward trend. That's possible, but let's try it without the truncation. Truncations are actually not very common, and I'm always rather suspicious of analysis that relies on truncations to make it work. Yeah, I think this is going to be great. And now within this third wave, I'm going to put some labels in there as well. I'm going to have 1 here, 2 lasts 2 weeks, 3 down here, and 4 is over within 1 week. 4 is more brief than 2. That's absolutely normal for cryptocurrencies and markets which exhibit extreme volatility. And so I'm happy with that. I like that labeling. I'm going to leave that. Let's take a quick look at why. Okay, so primary 2 is a double zigzag. The first zigzag in the double is labelled intermediate wave W. It's a zigzag. It's labelled A, B, C, and it subdivides 5, 3, 5. And C is extended and A is short. That's okay. The first and the second zigzags in the double are joined by a 3 in the opposite direction, and this is labelled intermediate wave X. It's a zigzag A, B, C. Actually, I'm going to put B down at this low here. Let's just quickly put some labels in C because I can see C is a 5-wave impulse. A zigzag subdivides 5, 3, 5. C waves are in a third wave position, and so it's not unusual to see C waves extend. They can behave like third waves. It's really common for a third wave to extend, reasonably common for C waves to do that as well. Okay, so X is over and then Y is moving price lower. It could be over down here. Let's look at the length of Y. If I click on these waves, I'm using Motivewave, that's the software here I'm using, and here's a great feature of it. I click on the waves, I highlight them, I see the pathway, W, X, Y. I can also see here, I can see the numbers. So this first number here is the price point, and the second number in brackets is the length from the high to the low is 0.244705. The second wave here, Y, from the high to the low is 0.159593. I'm going to grab my calculator and just old school, I know. I'm going to grab my old school calculator and have a look at how long is Y in relation to W. Is there a Fibonacci ratio? So I'm going to take W, 0.244705, divided by Y, which is 0.159593. W is 1.53 times the length of Y. So is Y 0.618 the length of W? So let's take W, 0.244705 times 0.618 is 0.151227769. That's really close to the length of Y. So Y is 0.618 the length of W. It looks longer visually, doesn't it? That's because of the scale. I've got this on a semi-log scale, but when you analyze Fibonacci ratios in Elliott wave, you're looking at the arithmetic relationship, because Fibonacci ratios are arithmetic. I'm not going to apply a logarithmic function here because that's not the way it's correctly done. And hey, let's just keep it simple, right? Y is 0.00836 and some more longer than 0.618 the length of W. So there's a nice Fibonacci ratio between those two. That gives me a little bit of confidence that I could have this labeling right. Let's now look at the labels within Y. If this is a zigzag, it has to subdivide 5, 3, 5. I'm looking at the overlapping here within A, and I'm wondering if a leading diagonal is going to work. Let's put those labels in. Nope, we'd have 1 here, 2 here, 3 here, 4 here. Okay, now the waves look right, but are the wavelengths right? This would be an expanding diagonal. Let's click on this so we can see the wavelengths. I'm looking at these numbers in brackets. I have to expand that out to see that a little bit more clearly, sorry. Okay, so 1 is 0.057630. 3 is longer than 1, it's 0.078104. And 5 is longer than 3, great, 0.083674. 4 is longer than 2. So 3 is longer than 1, 5 is longer than 3, 4 is longer than 2. This is an expanding diagonal. The trend lines have to diverge, and they do. That looks pretty good. For an expanding diagonal, it's not necessary, or it's certainly not necessary, but it doesn't always happen that 5 ends at the 1-3 trend line. It can fall short in an expanding diagonal. This little B wave looks like a pretty good zigzag, a 3-wave structure. And I think C is going to subdivide quite nicely as a 5. Let's check this out. Nope. Or actually maybe. Okay, I'm just looking at the structure of 1. It has to be a 5-wave structure. Let's get some labels in here. Yeah, I think I'd want to put 1 here, 2 here, 3 here, and 4 here. I am putting 1 and 2 on the same weekly candlestick. That's okay because the candlestick is green, so the high, this assumes, and I have to check that at a lower time frame, the high comes after the low. The end of 2 has to come after 1, so I have to check that at a lower time frame. This little movement, a nice little counter trend movement, looks like a second wave correction. I like this third wave. It's got a really long spike, a long lower wick on that candlestick. That's a really typical look for a third wave, and it bounces up for a fourth wave. I'm pretty happy with that labeling, but I've got to check some subdivisions at the daily chart level, and particularly primary wave 1. That's important because it looks like a 3-wave structure, doesn't it? Okay, let's save that work And now, and this is one trick for using motive wave, I'm just going to expand this out so it's taking up all the room. I'm going to create a new analysis using this button up here, the little page icon. I'm going to call it daily. Base it on primary, yep. Here it is, here's my new analysis. And this is why I do my weekly work on one chart and my daily work on a different chart. You see here on the weekly chart, the low of primary 2 is perfectly snapped and attached to the low of this candlestick. But when you move down a time frame, it's not snapped. I've got to snap it in there. In fact, none of them are going to be snapped in. Oh, I think we might have a little triangle there. I'll put that there, and let's just put some labels in here. Triangles are tricky structures, aren't they? This is the most common type of triangle. This is a regular contracting triangle. Oh, no, sorry, I didn't mean to do that. I just want to put the trend lines in. Yeah, that's better. So, minute wave 4 here, that's my pink degree is minute. This is a regular contracting triangle. We have A, B does not move beyond the start of A, so it's a regular triangle, not a running triangle. The other type of triangle is running, where B does move beyond the start of A. Here it doesn't, so it's regular. C does not move beyond the end of A, D doesn't move beyond the end of B, and E doesn't move beyond the end of C. It's a sideways movement in an ever decreasing range, taking up time and moving price sideways. And look at how beautifully these trend lines are adhered to. This is a really good looking regular contracting triangle. Sorry, I'm as I go through recording this video, I'm thinking of my analyst in training, and I'm hoping that this is going to really help him learn Elliott waves. So if it's helping him, it's helping you as well. That's a pretty good theory, I reckon. Okay, let's go back and have a look at primary wave 1 on the daily chart and get some labels in there. I'm going to have to squish it up to see all of it. And let's snap the beginning in and put, so a first wave can only within a larger impulse can only subdivide as a 5-wave motive structure. So it's only going to be an impulse or a leading diagonal. Those are my only two options. I don't think it's going to be a diagonal. So let's check an impulse. A motive wave says, no, I can't see it. But I'm like, well, actually, I'm sorry, but I can see it. So let's have a go. Now, this is going to be a problem for some people, but I have learned over the years that this is actually not a problem. 4 is a lot more brief than its counterpart second wave. That is a really typical behaviour, not to this degree, but really typical within commodities. And I'm used to analysing gold. I used to do it on a daily basis, now once a week. I've also analysed silver and every now and then natural gas, copper, and US oil once a week as well. So I'm used to analysing commodities, and within technical analysis it's understood that commodities exhibit blow-off tops and selling climaxes. So a blow-off top is when price is moving higher and it just moves up in this vertical movement like this, usually with a volume spike, and then that's the end and it reacts down. Selling climax is the same movement in the opposite direction. When we put that tendency of blow-off tops and selling climaxes into Elliott wave structure, what that means is the 5th wave is the longest and strongest part of the movement. And that's especially so for a 5th wave to end a 3rd wave impulse 1 degree higher. Minor wave 5 to end intermediate 3 is the strongest part of intermediate 3. This is a really strong upward movement. This is actually pretty strong too. And so when you see that, that's absolutely normal behaviour, and it causes the 4th wave that comes just before and just after to be more brief and shallow than its counterpart second wave. The strong upward pull, this force pulling everything higher, forces intermediate 4 to be brief and shallow compared to intermediate 2. I have no problem with that chart looking like that. But the key is, will the middle of the 3rd wave fit as an impulse? Let's look at it. Ooh, is it going to work? Oh dear, I don't know. After saying all that, is this just not going to work? That correction for primary 2 had a really great fit for Ravencoin, so no, nope. Got to put that here. Oh, is it? Oh. No, I don't think that's going to work. But does this? Yeah. 0.13189. And the high here, 0.135. No, there's an overlap there. So 3 could be over here. 4 could be over here. Is 3 then going to subdivide as an impulse? It can only subdivide as an impulse. No. Oh, I don't know if this is going to work, guys. Oh, how annoying. What's this? 0.13474, 0.13189. Nope, there's an overlap there. That doesn't work. Okay. Where else? If minor 3 could be over up here, and then minute 3 could be over here. Is it going to work now? Yes. Okay, so this is an impulse. No problems there. Let's put that there. I think that's probably better. Yeah, I can see a third wave right in the middle here. Let's put those labels in. Yeah, that looks really good. Okay, that part's okay. Now this could be a combination. Overall in a sideways movement, we could have a quick zigzag, X. Oh no, that's a double zigzag. I don't like that at all. Well, could be like this. This is the hardest part so far. A, B, expanded flat. But is C going to subdivide as a 5? It doesn't look like a 5, does it? This is just going to be too forced. I don't like this. Nope. Do not like. No. Okay, so don't like that at all. Okay. What else could be happening here? In here? Oh, okay. What if with the spike is 3 and 4 is in here? I've seen that before in other crypto. And 4 some kind of triangle. And this one move it up here. And now yeah, now this is going to work. Yep. Yep, that's great. Okay, my conclusion is primary wave 1 subdivides quite nicely. The middle of the third wave is okay. This really brief fourth wave, I'm actually okay with that. I've seen that before. Bitcoin's done that before. It can throw you off as you get toward the end of an impulse. Those fourth waves can be really brief. This fifth wave at intermediate degree looks pretty strong. This is a vertical upward movement, 3 sessions in a row. When you look at it on the weekly chart, it's 1, 2, 3, 4 weeks of pretty much vertical upward movement on a semi-log scale. That's amazing. Massive volatility there. I love the look of this chart. I know, sorry, I'm so geeky about this, but it's just fantastic. I think I am probably going to buy a little bit of this in the next few days. I think I'll be ready to make some more purchases on Monday, and I'm going to go through all the charts of the previous coins I've purchased and purchase a little bit more of some of those, particularly XRP, maybe this one and a few others. Let's look at technical analysis. Now, to orient ourselves, I'm going to look at this low, then I'm going to look at this low. I'm just going to look at maybe at the weekly chart for this low. So at the weekly chart level for the low of March 2020 for Ravencoin, there's no bullish candlestick reversal pattern, but there is this bullish long lower wick. The moving average situation at this time, full bore bearish, as you would expect toward the end of a bear market. I use moving averages more of as a confirmation of is the wave count on the right track, particularly when I'm expecting that it's getting toward the middle of a third wave, but they are lagging indicators. I am well aware of that. So more of a little bit of support for the analysis there. As price fell to the final low, it did so with declining volume. No selling climax down there. There's no volume spike on this week down here. This previous movement here, how confusing would this have been? So we've got bounces with strong volume to the upside. Here again, and here again. Upward weeks are stronger than downwards weeks. So How long did that persist for? Well, here it was pretty strong to the downside. That's pretty bullish. So yeah, this is pretty, that would have been hard to read. Coming off this low, do we see strength off lows? Not until we get to here, quite a few weeks later. So what about divergence? Well, there is some between price and on-balance volume. The closing price here, 0.013616, and the closing price back here, 0.022679. Price is closed substantially lower. On-balance volume has not made corresponding lows, so there's some bullish divergence. I do actually prefer to use on-balance volume with trend lines, but it doesn't really work so well when I do that in motive wave because it's got this big box here that just gets in the way. So would have had a bullish signal here, bearish signal here. Let's extend this line out. Resistance, 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 broken, support, support, support. So here we're starting to get bullish signals from on-balance volume as well. Test support, bounces up. Test support, bounces up. Test support again, bounces up. So this trend line could have been quite helpful. What about ADX? At the low, it was above 15 and that black ADX line was rising. Positive DX line above negative. This is indicating an upward trend for this bounce. Here, ADX is declining, indicates an upward trend before the final low in that bear market. At that low, it did not indicate a downward trend. It just indicated a potential trend change. Wow, that would have been a really hard low to identify. RSI didn't reach oversold. Looks like there's no bullish divergence between price and RSI. Between price and money flow index there is. From this low to this low, price has closed lower, but money flow index has not made a corresponding low. That indicates that in this downward movement, money flow index is telling us there's weakness in that downward movement, and that's bullish divergence. Before a trend change, you'll often see some weakness. I think of it in terms of energy. As you get toward the end of a trend, the energy, just like a car running out of petrol, it just declines and declines, and then it reverses. ATR declining throughout this bear market down here. A little bit of an increase at the low. That would have been a little bit of an assistance that maybe that low was possibly sustainable in conjunction with bullish divergence between price and on-balance volume and price and money flow index. Those are some indications that that could have been a low. Sometimes downward movements, I'm saying that because ATR is in a measure of volatility. Sometimes downward movements can end with stronger volatility in markets like this. Remember, I was explaining to you the end of those fifth waves, those blow-off tops and selling climaxes. This is one thing you can use to identify the end of a move. Now, this isn't a selling climax, but it did end with a little bit of a spike in volatility. Okay, so that's what that low looked like. Really hard to identify. Let's look at the current low and see same, different. What is it looking like now? Okay, here is the last low on the week beginning 12th of June 2020. We're still on the weekly chart. I'm going to also maybe look at this one at the daily chart level. First thing to note, a beautiful bullish candlestick reversal pattern at this low. That's an indication that maybe that low is sustainable at least for the short, if not the midterm. At this low, there was a little bit of an increase in volume at the low. But again, look at this. These bounces within this bearish trend or bear market actually had stronger volume. So that's a little bit bullish. We've seen that before. Oh, what a huge downward week here. It's an upward week with a higher high and a higher low. Let's look at that. Here's an upward week. Higher high, higher low. High, higher. Lows, higher. This is an upward week, but it's closed red and it's got strong volume. We need to look inside that week because the colour red and the higher high and higher low meaning prices going higher, are contradictory. So we need to look inside that period before we can draw a conclusion on that volume. So we've got resistance about 0.070396 and 0.05, support about 0.02. Up off this low, the first week, the bullish engulfing candlestick pattern does not have support from volume. It'll be nice to see it, but for cryptocurrencies, I've learned the hard way to not always expect it. If you don't see it, it's not such a big deal because they do tend to move off their lows really slowly. Starting to see some push from volume here and here, but we need to look at this week carefully at the daily chart level. Wow, on balance, volume is making new lows prior to price. Price is making higher lows, on balance, volume is making lower lows. That divergence is bearish. That's concerning for a bullish case. I've seen this before on one of Bitcoin's sustained lows. I think it was the 2014 one. Bitcoin moved sideways in a triangle making higher lows, but on balance, volume made lower lows. That would have been a really difficult low to identify, but it's been sustained to this date. So on balance, volume with its divergence isn't, I'd rather use it with trend lines, but I will look at divergence as well. I'm just not going to give it as much weight as I will looking at divergence between price and RSI and price and money flow index. ADX at the weekly chart level is above 15. The ADX line is rising. The positive DX line is above the negative. ADX is telling us that there is an upward trend. This is the strongest signal ADX can give when it comes from low levels and rises from below both DX lines. So that's a strong bullish signal, but it's a lagging indicator. Most of these are. We just have to weigh it all up. RSI at this low here, after the low, reached oversold at the weekly chart level. Has that happened before? Let's just quickly squish this up. No, that's the first time RSI has reached oversold. I'm going to take that as very bullish. This downward movement here is extremely oversold. So that may well be associated with a sustained low. Money flow index at the low here. Well, on a closing basis from this low, 0.066156, to this low, 0.039916. These bullish divergence here, I'd rather be looking at it between peaks though. At the low here, no, that's just not clear enough. ATR declining throughout that bearish movement, not showing any increase at the low, so that didn't end with any strong volatility. That's okay, it's nice to see, but if we don't see it, it's not a game changer. Let's look at the daily chart level. At the daily chart level, we've got a hammer candlestick pattern here, bullish long lower wick here, bearish upper wick, bullish long lower wicks here. So there is a bullish reversal pattern almost at this low, and this one here is also a bullish engulfing pattern. It's fully engulfing the real body of the hammer candlestick. It's a pretty small real body, so not so bullish, but still there's two bullish candlestick reversal patterns here. Oh, and another one here, another bullish engulfing pattern. Okay, so there's one at the weekly chart level and three at the daily chart level. That's quite bullish. The moving average situation here, as you would expect at a low, full ball bearish, short-term average below mid, below long. They're all negatively sloped and prices below all three. What's the situation now? The 50-day moving average may just be about to cross over the 200-day moving average. That's a golden cross. The short is above the mid and the long. But the long 200-day moving average, that's the green one, still has a negative slope. So a little bit of an inconclusive look at the moment, which is what you would expect if there was a low back here. These are averages based on past data. They're backward-looking indicators. They take a while to move forward. Like a ship or a train trying to stop, they just take a while. Their energy needs to have a while to change. Okay, let's look at volume. At this low here, price was pushing volume, or volume was pushing price lower, particularly on this candlestick here. But that didn't amount to much. A little bit of sideways movement, declining volume on price moving higher, and yet prices started to move higher here. So now here we're starting to see strength off lows, and here, absolutely quite strong upward movement. What about that last week? Oh, okay, now this is why I say that red candlestick, remember, let's look. This candlestick had a strong volume, but it was contradictory. You look at it on the daily chart, it's upward sessions which are giving strong volume. So that's bullish. Volume is strongly pushing price higher. Now price is falling and volume is declining. Price is falling of its own weight. Here it's falling due to a lack of activity from buyers rather than activity from sellers. On balance volume at this low, no bullish divergence, would have given a bullish signal here with a break above resistance. And moving higher with price, so offering some confirmation of that upward movement. That's good to see from on balance volume. At this low here, ADX indicated a very extreme trend. It was above 40 and above both DX lines and rising. So the trend was extreme for that downward trend. What's it saying now? The upward trend also reached extreme. How extreme can ADX get? Let's squish this up for the daily and see. Well, back here it was above 55. And back here ADX reached above 70. So it's not nearly as extreme as it can get. But it is extreme, so it could get more extreme. What about RSI? RSI at this high looks like incredibly weak bearish divergence, so weak, but quite strongly overbought, so way back in neutral territory. What does it look like at the low? Oh, nice, some good bullish divergence between this low down here. Price closed at 0.024557. Here, price has closed at this low, 0.019458. Price is closed lower, but RSI is higher after reaching fairly deeply oversold at the daily chart level. Has it done that before? A few times. Okay, this is strong bullish divergence. That supports the view of a sustained low, and also money flow index. Quite strong bullish divergence here. And ATR, what was that doing at this low? Oh, yes, nice. Showed a little increase at the low at the daily chart level. Nice to see. I think that supports the view that that low may very well be sustained. That supports the Elliott wave count. I think this low is sustainable. I think this is a good purchasing opportunity, and I think I'll be ready to purchase early next week, and that's what I'm going to do. Thank you all so much for your support, and again, thank you so much for the support from CoinsKid and all your crew. I love you guys. You guys are awesome. I love it when people support my work and they're happy to do so. And I'll keep trying to give you a new analysis every day while I'm finishing up here in Bogota. I was in a green screen recording studio all day today. That was fun, finishing up some content for my next 2 online courses, hopefully to release the next one in the next month or so, I hope. So that's really exciting, and that was a lot of fun today, but oh goodness, a lot of work. Okay, that's it from me. Thank you so much for watching.